Hey guys, good morning. It's Tony. I actually got a request on my Patreon to give suggestions on what levels are actually, if you're considering adding to your long term portfolio, specifically for big tech, right? So I'm gonna go through Amazon, Google, Apple, NVIDIA, possibly Netflix and Facebook, just to let you guys know what levels are upcoming and a really good place to add to your long-term portfolio, because we're starting to get in some really good areas for these long-term portfolio additions where essentially you can get things for almost 50% off, right, on big tech, which is it tells you kind of how ridiculous this market has been, right? Even Amazon, you're looking at a 50% sale right now on Amazon. So if we were to go back to all-time highs, you're getting Amazon. You're going to be doing a full 100% from 90 to here, right, to 180. You're looking at a full 100% gain over the course of maybe the next couple of years, right? So, like here's how that I wasn't expecting Amazon to actually go significantly lower. I did expect. Well, I mean, I'm not surprised, but I didn't have any market structure set up down here, right? Which is kind of insane, right? So but anyways, the video is gonna focus on essentially if you guys want to buy or want to add. If you guys want to add, basically to your portfolio, that's really it. It's if you want to add to your long-term portfolio, what are some good prices you should start adding, these big tech companies on. And I'll make this white just to keep this, you know, uniform to like everything else, right? So I think right now, I actually think right now, the fact that you can get a full 100% gain from Amazon, I think right now is actually a really good spot. So here at $90, I think it's pretty, if you're doing this for your long-term portfolio, I think that $90 is a no-brainer, right? I think if you have, let's go with $1,000, right? If $1,000 to add to your portfolio right now, I'd say 100% do it, right? Even at $90, throw everything at it, right? That's what I would like, ideally, right? Because this is your long term, right? You're looking at what kind of return you can actually get within the next, I don't know, 10, 20, 30 years or so, depending on your age. So I think $90 right now is actually one of the major levels that you should probably be adding to your long-term portfolio. TA wise, I'd still say that we can go a lot less. I'd still say that we can go lower, right? I think we definitely go lower on big tech. But if you're adding, like I said, to your long-term portfolio, I definitely say this level is really good. And here's the thing though, a lot of people do think that, at certain points, right, that after a certain level, it's like you start looking for more drops, right? For more significant drops, and you can even tell with Amazon right now how much more, how much bigger these drops are going to be after a specific point, right? So even right now, right? I think that let's go like that. So even right now, right? If you're looking at buying Amazon long term, like you're looking at these major levels, right? The next major level, the next, like I said, I think right now is a really good time to add because you have a full 100% gain, and it really just depends on what kind of gain you actually get from these levels to the previous high of 180, right? So if you go down a little bit lower, you'll probably make like 120%, etc. But again, all these levels are pretty significant, right? If you actually hit $90 and you actually go from 90 down to like $58, that's close to another 50% drop, right? And it really just depends. Like, are you adding this to your long term and you actually don't care about this, or you're trying to do a little bit of TA and see if you can get maybe a better price? So I think, to be completely honest, I think adding at these specific levels and separating your money based off of that is going to be a really good idea. And there's no other way to put that, right? So what you can do is you can put, if you have $1,000, you can put like $500 right now at like 90. If it drops down to 67, for example, because that's the next level. If you kill 85, right? If you drop from 85, you break that level, you're going down to $67 on Amazon, 67, $70. I'd say that's your next area of addition on Amazon. So maybe put 250 now. If it drops down, then maybe put 500. If it drops down, maybe put the rest of it. I don't know if it's actually going to get down to $50, $35. That's going to be kind of a ridiculous drop. essentially that would take us into a depression. I'm not even gonna lie, right? That's some pretty bad. That's some pretty bad drawdown on the stock market. But I think with Amazon, I think the really correct way to do this, if you have $1,000, I think adding like $500 right now is perfectly fine. Drops to 67, add 250. Drops to $60, add another 250, right? And kind of separate it in that way. But really, it's just to show you guys what, whoa, Google USD. Why is this showing up like that? The NASDAQ? Goog. Super weird. Look at that. I don't even have any levels on Google. Let's do it right now. So Amazon, that was basically Amazon right there. That's what I would think would be a really good spot to add to Amazon. Google, you're probably looking at not like too far off levels, I think. I think you're looking at sort of like similar places of where to actually add. Let's go with this. Let's go with here. We're using the monthly. Let's use a monthly chart because that'll probably be a lot easier to kind of determine, where things are going or could go to. Can I put it up here? Yes, I can. And then it's so insane because Google just went straight up. Yeah, so I think that right now, adding Google right now is actually a really solid level, to be honest. I think Google at these levels is great. The next level you're probably going to go to is 80. Do I really have two levels here? Let's delete that one. There you go. So these will be your solid levels of Google. Next spot will be right here. Then next will be like right here somewhere, like right there, right? And then it's just the rest of this. But I think right now, again, really solid level on Google. I think the all-time you're down, I think, essentially almost 150% from the all-time highs, right? But I think, again, I'd use the exact same setup right now. I'd use the exact same setup. If you have $1,000, buy 500 right now. If it drops to 73, 75, buy 250. If it drops, buy another 250. That way you start DCAing to the lower end. But these are going to be your levels, right? These are going to be the levels of where you should start adding to these big tech companies, right? And then let's go look at Microsoft. And again, same thing with all these videos, right? It's just to show you guys what the levels are actually going to be for these bigger companies, essentially. And if we actually drop to these levels, that's going to be pretty ridiculous. And again, that would go with my forecast of that 320 before, but I'm starting to get like maybe like a little bullish on like the market and stuff, right? But it's kind of difficult right now to determine if it's actually going to head like down there and stuff, So these are going to be your levels. Man, dropping down to these levels would be kind of insane because that's basically COVID. But again, these are going to be your levels for Microsoft: 209, 187, 186, 173, 150. And again, same thing. You have $1,000, put $500 now. If we drop lower here, right, put 250. We drop lower, put 250, and essentially you're just DCAing all the way down. But I honestly think that at these levels, it's kind of a no-brainer to add to spot, right? I think it's a really, really good idea to add to your long-term portfolio at these levels. Like, it just makes complete sense, right? And even with Apple, right? Even with Apple trailing down, popped up, came back to retest, you wicked all the way down, came back up. Like, this is bullish momentum, right? Like, if I didn't know any better, I would say this is the bottom of Apple, right? And this is basically you for like the next maybe couple of months, right? It looks extremely likely that Apple's going to jump to the high side. And again, same thing with Apple. I think Apple right now at 137 is a steal, even though it's not that low from its all-time highs, because Apple's a ridiculously strong company, and it would be extremely rare, for us to get Apple at like $100, to be completely honest, because Apple just doesn't. It's just a very strong company, and even though it's fallen like a bunch from its all-time highs, it's not like the other big tech where it's like extremely. I don't even want to say risky, because I'd say Microsoft and Apple, like, you're looking at some pretty decent returns for like a really nice safety net. You do have a nice little wick down here, 96. You have a nice gap that hasn't gotten filled yet, 96, 100. That's actually kind of insane. Where's this from? July 2020? Oh, that's not good. You have another gap right here. Oh, that's kind of insane. I didn't even see this huge gap. 96 to 100, but $4 gap. That's a 4% gap back in 2020. That's actually kind of insane. I never seen that gap before. That makes things extremely interesting. And that's on the week, and it's on the daily. You can see this on the daily chart that that's a big gap. Oof. Now I'm thinking now Apple maybe can actually go down there. That's kind of insane. Um, Maybe it's time to reassess some stuff. Anyways, these are going to be your levels, right? Again, Apple, I really don't think that there's a huge chance that it drops like to $50 or something or under $100, right? It's just it's a very strong. It's the strongest big tech and quite possibly the most valuable company in the world, right? That's basically what Apple is. It's more than likely the most valuable company in the world. So again, these are the levels that you want to buy, right? Again, perfectly good time to add in your full portfolio long term. Like if you have like $1,000, me personally, I would definitely put the whole $1,000 right now at like 138, right? That's just me. And then when it comes back down, I would buy like another 500 here, another 500, 500, 500, right? And then DCA. But I think right now, for the majority of these companies, I think it's a ridiculously good time to start to just start loading up, to be completely honest. And even people think that Meta is some people think that Meta is not gonna even here I actually thought Meta was gonna recover a little bit, but it actually, and I do think that Meta was gonna recover. It's just the news on after Jerome Powell spoke, and then that's what tanked it, and the news basically killed it. But I would buy Meta right now. I think Meta is not horrible at these prices, and I think if they do recover, if they do start doing some crazy sentiment, I mean, you're looking at what? This is almost a 400% gain. You're looking at almost a 400% gain over the course of maybe the next couple of years, if they can actually get things together, right? Can they drop lower? 100% they can. They can definitely drop lower. But if you like Meta, and if you like, I don't want to say, being risky. Actually, I'll remove all this because we can definitely do some new levels here. Got some motion there. Here we go. So let's add you a couple of good points of market structure. Like right here, good market structure there, right? Motion detected in your garage. That's probably a cat. Looking at really good structure here, like right there. And very good structure. Extremely good structure there. And then again, probably like right here somewhere at like $45. And a lot of people have asked me Tony, like a dollar drop from 55 to 45 doesn't seem like that much. Numbers wise, it doesn't, but percentage wise, this is actually a pretty decent drop, right? Like you actually drop. This is a full, 17% drop from 55 to $45, right? So while it doesn't seem like a huge drop, especially from, especially since we're dropping $10 in a day, right up here on Facebook, when you start getting to the lower end of the numbers, right, or the lower end of stock price, if you go from $10 to $5, that's a full 50% drop, right? Whereas a 50% drop from all-time highs of Facebook, 380, you're looking at what, 190. So a 50% drop is from 380 to all the way down to like here, right? So a 50% drop is like a 190 drop, right? That took months. But if you're right now, if you're Facebook, right? If you're buying right now, you would take a 50% drawdown if we go to like $45, right? And that's only a $45 drop, as opposed to dropping $190. So, it does get a little bit more dangerous at these lower levels because now it's a lot easier to drop in percentages than it is to just points, right? So that's the problem. But I think Facebook's a little bit more risky right now. I do think that it's definitely still a solid-ish company. They're spending a lot of money for, essentially something that might not happen that would benefit them a whole lot. I think I think Meta is probably not as safe as investing your money in for long term in Apple, Microsoft, Google, NVIDIA, whatever, right? So I think Meta, even though the prices right now are kind of okay, I'd spend, if you have $1,000 to spend, I'd buy like $100 right now, and then if it drops down, then you buy another $100 to spend, right? So while it is pretty okay, it's a lot more risky than other companies, and I think until they actually start, what is it called? I think until they actually start, not spending as much money for the Meta platform and for the metaverse, I think it's a good idea to just kind of stay away from Meta for now, at least for long term, or very very small positions. Don't go like fucking all in and stuff, right? And then NVIDIA, I actually really like NVIDIA, and let me tell you why. And I think, and this is actually going to go back into another video that I was going to release a while back. But first of all, these are your levels, right? I think NVIDIA at any of these prices is a ridiculously good steal. And let me tell you why I actually think NVIDIA why I'm 100% bullish on NVIDIA. And essentially, it's because crypto is bullish. And I've been noticing that NVIDIA has an extremely huge delay where that's why I actually think that it's actually running instead of everything else, because I think that when Bitcoin is up, you have NVIDIA and AMD and all these huge market processors, or these computer chips, or these computer like RAM and everything, selling for ridiculously huge amounts of money when crypto is up, right? And if I think that crypto is going back up, that means that that's going to result in kind of like a small delay in NVIDIA, AMD, Qualcomm, because all these chip makers are going to start making a lot more money if crypto is actually starting to run up again, right? And it has a small correlation, well, not a small correlation, it has a pretty heavy correlation, because it directly involves their sales. So if crypto is up, that means that everybody's starting to mine again, which means that NVIDIA, AMD, and Qualcomm are probably going to push to the upside. So if anything, I actually think NVIDIA at this price is a ridiculously good steal. And I am more than likely, this is you're easily going to make over 100% if you buy now and it goes back to 350, which I do think it will. I do think eventually it's going to go back to 350, and if NVIDIA actually, or Bitcoin actually ends up doing a full bull rally, I think you're going to go past 350, and I think NVIDIA is going to be one of the more prominent, prominent big tech companies, to be completely honest. And at these levels, it's kind of dumb if you don't invest in NVIDIA at these levels right now. Like, I would easily buy like 100K of NVIDIA right now on margin or something, just because I'm extremely bullish, right? So I think at NVIDIA at any of these levels would be, I think it's a steal. I think it's a perfectly good buy, especially because I think that crypto is going to run in the next 2.5 years, right? I think that's all of them. NVIDIA, Google. I mean, I guess we can do Netflix too. Oh, Netflix with that heavy boy drop. Did it fill the gap? Didn't fill the gap yet. Anyways, these are going to be your levels for, these will be your levels for Netflix. Let me see if we can go back a little bit lower. Where's the next level for this boy? Let's see. Right there, 150. So Netflix doing pretty okay. They still have that huge gap that they got to fill back above, like, I think it's like 330, right? Their gap is at like 330, right? Yeah, like 330 or so. I think Netflix is going to be doing okay. I think they're starting to go. I think they've already possibly hit maybe slight bottom to the lower end, but it's really just depends on what we think is actually going to happen. Because look, if you run just a really quick trend on like the lowest wick right there, you can definitely come back all the way to like maybe I don't know, like 230, 240, between 230 and like 250 or so, somewhere around this range, and then pop to the upside. So but again, that's only thinking that that's only looking at everything and looking at like the bullish side of things, right? Like, so is Netflix actually bullish right now? And I think it actually is, because he actually broke, let me see, from its all-time highs right here, from its all-time highs of 703, right? You actually broke this trend, right? You broke the, actually it should be a little bit higher, like right there. There you go. You actually broke this trend back a couple of weeks ago, back in August. So you came up, broke the trend. You haven't retested, which is it's a little bit scary, to be completely honest. The fact that you haven't retested this is a little bit scary. Or have you retested? We'll put it there. Did we retest? The only reason why I don't like these, would I consider this a retest? I don't know if I would. The only reason why I don't like these, sideways tradings on these big tech companies is the scary part is that if you do end up retesting things like this, you end up retesting at a very low price, right? So you break out this way, and then an actual retest on trend would be what I would consider as like dropping all the way down to like here, not negative 21, but dropping to like here or something, and then pushing to the upside. That's weird because I would definitely be worried because I don't think it actually did a full retest on this like wick and stuff or on trend. Let me see about the 4 hour. Did it retest? Yeah, I don't think I would consider that a full retest, but I mean, whatever. But Netflix, personally, because I like other big tech companies better than Netflix, I would personally not add Netflix to my long-term portfolio. I mean, I would still add it just because like a very small percentage, but me knowing that you can have like more value, right? You can have Apple, you can have Microsoft, you can have Google, you can have NVIDIA. I would probably end up picking, let me see where Disney's at. I don't know if I would actually pick Disney over Netflix. I'm not sure yet. They're going to be roughly, they're like the same thing. Disney actually looks like it's going to do a lot worse. Disney looks like it's going to go under, $90. So I'd probably wait on Disney to buy. But let me see. Netflix. Yeah, I mean, Netflix is okay. I think if it was up to me, I'd probably spend my money elsewhere for long term. Or if you're thinking about buying Netflix, maybe like a small portion, maybe like 5% of your portfolio or so. But again, Netflix, I think you can actually wait. I think you might actually get these prices a little bit lower, at least at like 230 or so. I think you might come back and retest this 230, 250 level. It seems likely, or maybe just go at least a little bit lower to like 250 or so, I think. But I think that's it for the big tech companies. I don't think I'm missing anything, but let me just double check. We can actually go to the NASDAQ and run it this way. So Apple, Tesla. Tesla. We'll do Tesla because I do like Tesla. I think Tesla is actually pretty good. These are your levels right here. Oh, Tesla actually looks like it's gonna drop even lower. Yeah, Tesla looks like it's going to 182. That's kind of disgusting, honestly. Man, all these companies like the thing is though, the SPY looks kind of bullish right now. Let me see. Get out of this here. Probably out of this there. Oh yeah, I'm in the bathroom if you guys haven't noticed. This probably at another level here. That's a big drop actually. So that would be a really big drop on Tesla here. Yeah, so from 93 to $62, those are ridiculously huge levels. And then your next level, would actually be all the way down, like 44, and then possibly down here. Yeah, like right there. Next level would be like $25. Yeah, somewhere around these levels. Will it actually get there? Man, I don't know. But it is looking kind of scary for Tesla right now. So I'd say Tesla, you can probably still wait a little bit. I'd wait for the weekly to actually close bullish. When the weekly actually closes bullish, you have a really good chance at catching the bottom of Tesla. Give me a second. Right, so average range up on a bullish close on Tesla. You're looking for, look at this, right? You end up pushing $87 in 40 days here. $126 in 20 days, right? So all these perfect entries on Tesla actually end up playing out extremely well, especially when you're closing the weekly, right? So again, here, you're running this up all the way up to, $400. If you actually run it up to highs, you're running it right here. $211 in 140 days. So I think right now is actually not a bad time to start DCAing into Tesla. You might see a smaller drop recently. The daily still looks pretty bearish, but again, these are your major levels, right? I think right now, look, because just wait, right? If you're part of the Patreon and you have access to my indicators, wait till it gives you a weekly bullish close, right? Wait till it gives you a weekly bullish close. And even then, if you want to add to your long term from here on out, just because the market is so low, I'd say add every single time we have a weekly bullish close, every single time, right? DCA only when there's a weekly bullish close, right? So you would have DCA'd around here, you would have DCA'd around here. Maybe you're going to DCA somewhere around this level, just because in the next week or two, you're probably going to end up closing a bullish week, right? And that's probably going to take you back to like trend at like 267 or something. But Tesla looks pretty okay right now. I'd say probably wait a little bit. With that being said, I think those are all the major levels. I think I went through everything, especially all big tech. That's really all I wanted to do, just going through all big tech. If you guys want to see, TA or major levels of market structure or recommendations of where I think, or where at least I would, right? Where I would add to my long term. Those are all the levels there. If you guys want to look at specific tickers, just let me know. Drop it on the comments below. For the most part, that's the video. That's where you guys should be, looking, in my opinion, looking into adding to your long-term portfolio for big tech, right? And we just went through every single one of these big tech companies. So with that being said, I'll see you guys later. Have a great day. Bye-bye.